Testing 1 2 3. Mr. 4242.
You can hear him now. Okay, Crisis, what's up?
Okay, so they said they can hear us.
Yeah, but now my video isn't coming out. Hold on. It's kind of weird. Hey, the title needs to get updated, by the way.
Oh, okay, got it. Let me update it. My guy who usually helps me run these is MIA tonight.
Cool. I think everyone can hear. Okay, so everyone can hear and see us. See me at least.
Okay.
See me.
Yeah. Okay, I'm just doing the Twitch login real quick. What's going on, everybody? It's good to see you guys. As always, we'll be doing those free membership giveaways sometime in between this conversation. This is going to be an exciting one, so buckle up.
What's up, everyone? Morning Sense ad. Yeah. Well, while we're waiting for go check me out. I'm gonna be your longer term investing guy.
You're not. I thought you were the penny stock guru.
I'm the penny stock guru, I guess.
The OTC guy, they said.
How's the Bitcoin going? It's going very well. I bought my first Bitcoin at $300 back in 2014. So I think it's going pretty good.
All right, I gotta give me 2 seconds here. I'm trying to figure out how to change the title on this.
All right, so Blank Rabbit, you saw my video. That's awesome. Cool. We got 158 on the stream. It's great. I usually stream on YouTube, so Twitch is new to me. I don't even have an account. But while Mr. 4 to 8 gets ready, I can just tell you guys all about me and answer any of these questions if you want. Let's see. Anyway, whatever. So my name's Justin O. I am from Southern California originally, specifically Orange County. Went to Notre Dame, graduated in 3 years. Went to New York City, worked in debt capital markets, or actually investment banking, at Deutsche Bank at 60 Wall Street. Let's see. Yeah, so investment banking, did a lot of like LBO deals. At the time, it was one of the best groups on the street. After that, worked at a kind of a $1.5 billion hedge fund in the New York area. That one's private, so we'll not say the name, but lots of long-term value investing types of style analysis. After that, I went to a big one, $30 billion hedge fund called Citadel. You guys have all probably heard of it if you haven't already. So yeah, that's that. So did a lot, I was one of 3 people managing 9 figures. So, it was really cool. So actually back then, it was, I was in New York City, worked at 53rd and Lex. And it was actually in that big skyscraper that, almost fell down, or like it had like if the wind blew on one end when they built it, there was a TikTok on it. I forget the actual address, but, anyway, it was on Lexington Ave. So basically we managed like 9 figures. It was me, another analyst, and a PM. We leveraged the fees that Citadel paid on the street, to like basically analyze pre-IPO stocks and like we'd get allocations. And so it was a lot around IPOs, which is really interesting that all that's coming back around. So I have a lot of experience like investing like millions of dollars in IPOs from the institutional side, and also buying and selling just generally stocks after the IPOs. So, I mean, it just ended up being kind of generalist long short book. And, since then I'm allowed to do this because I'm not regulated by the SEC anymore. I actually took a job as the CFO of a software company down here in Nashville, Tennessee. So been doing that for, I don't know, 3 or 4 years now. It's been a great, first of all, I've always been kind of on the front end of the curve of trends. So I definitely beat everyone moving away from New York City to a zero income tax state. So just for those of you that, so just because, hey, Dolph, you live in Nashville. What's up? Go Preds, I guess. So what course did I take to get into investment banking? I didn't take a course. I mean, like I got into the typical internship bank and internship and whatever. So guys, I'm not Mr. 4 to 8. Mr. 4 to 8 is like prepping some stuff. Guys, if you want to check me out, I'm a couple cents everywhere. And I also have, a couple cents. And this is not, I'm not Mr. 4 to 8. I'm the guest today.
I'm here. Mr. 48 is here. I was getting organized and trying to get some of this. We updated the title on the video, it looks like, I believe. Yep, at Justin No, a couple cents. Awesome, guys. 6 p.m. Everybody's rolling in. We got 381 people here. Let's see if we can top out like 500-600 by the end of the night, guys. But yeah, thank you for introducing yourself. And sorry for I could hear the awkward silence for a second with you asking me a question, but yeah, I apologize. I was missing. So looks like the stream is crystal clear. Everybody can hear us. Questions are already on and popping. We're all over social media. So, let's get this started. Justin, thank you so much. Thank you so much for coming here today. We have this series that it's pretty new to us, but you've been doing this thing from the jump. And I just want to say thank you and shout you out because, to everybody that doesn't know Justin, a lot of you guys do know him. But for those that don't, Justin was Mr. Start the whole finance gig on TikTok. And that was at least how I got introduced to him. And he was actually the inspiration behind, my former business Stock VIP and, now Wiseguy Investing. So without this man, instrumentally the inspiration that he gave me to get on social media and create this business, we wouldn't be here all, together today. So it's amazing to have you here and, just thank you for all the value you've brought into, my life.
Yeah, no, of course. Thanks for having me. I'm happy to be here. Happy to be on here as much as you want. Mr. 4 to 8, cool. Awesome guy, has built an amazing community. You guys are awesome. And I'm pleased to be in front of you all tonight. So thanks for having me.
Booyah, booyah. So we talked a little bit, let's just get right into it. We talked a little bit about, who you are. You have this background in Wall Street and finance, some of these buzzwords that get people going, okay, this guy must, this guy knows his stuff, but you really do know your stuff. I think you're the first guy that we've had on here that is, I would truly say you're a numbers guy, right? Like when it comes to numbers, you can break out the spreadsheet and, get into it. Is that something that always interested you and came easy to you?
Yeah, I mean, that's a really good question, right? So I don't know. I'm sure you have some folks that are in maybe school, right? I'm not really sure what your average age of stream, like whoever's tuning in. But just speaking to those of you that are, I'll start from the very beginning. Basically, I'm Asian, clearly. Grew up wanting to be like a surgeon, right? But I definitely wanted. I found myself wanting to do that because it was, it was the thing to do. You're good at school, you study hard, you make good money, right? I think the biggest thing that really gave me hesitation was the fact that you had to go to school for so long. So the payback period was just so long. You basically only really started making money, at least at 35. We can fast forward, but and I also found myself dreaming about just business, right? Like opening up surgery centers or whatever. So I'm probably a lot older than a lot of you. Maybe not a lot older, but when I was in maybe like at the end of my high school experience, the 2008 Great Financial Crisis hit. And I was like, whoa, what do these people do, right? I was from California. I told these folks before. I was in California, and like us Californians don't really know much about Wall Street. Like that's something that you grow up knowing on the East Coast, but not the West Coast. West Coast is very engineering, like PhD, like very oriented culture. I was like, what do these hedge fund people do? So I basically switched my thing. I said, I want to go to a top school, a top business school, because I've never been one to be like, oh, I'm just going to study for studying's sake. Like I've always been like, I got to get that. I got to earn a lot of money. Money is the scoreboard, all the classic thing, right? So I, applied to the top 2 undergraduate business schools at the time and got into one, or early and got into one. Went there, graduated in 3 years. I actually applied to a bulge bracket investment bank as a sophomore, and applied as a junior, and then I got in because I was an academic junior, because I had accelerated my courses, and I had come in with a bunch of AP credits, and I got the job, the full-time offer. We did the internship in New York City. That was probably one of the most fun periods of my time, just like internship in New York City. And then off to the races, really.
Yeah. So we have a lot of, younger folks here. There's, we have our fair share of older folks as well, but a lot of, buzzwords come around the word Wall Street and hedge funds. Dive into hedge funds a little bit. What it really is, a hedge fund, and what was your role? I heard you were talking to a couple of people before, but we got a lot more people that entered now. So what was your role there, and how do they function?
Yeah. So what a hedge fund is a pooled group of money, by usually it's either super rich people, or more often it's like institutions, and they invest in a legal vehicle that's managed by investors, and those investors are called managers, and they take that money and invest it according to a style or strategy they have. Now, in order to invest in a hedge fund, you need to be accredited. So you kind of already need to be rich, or earn more than what the accreditation requirements are. Then you have to be, but usually it's like CalPERS. Have you guys heard of that? It's like a big retirement fund, or like Harvard's endowment, or, all these institutions, they invest in these vehicles, and then a manager invests that money for them, and in exchange, that manager takes a fee to manage the money, and a fee of the upside. But I would say the industry used to be really extremely lucrative, which is what lured me into it. It's still very lucrative on a relative basis, but these days, in order to start your own hedge fund, you really need like at least 50 to 100 million to start, and it's that.
Awesome. So let's fast forward a little bit and get to, you leave Wall Street. You were there for what, 10 years?
I'm still kind of around Wall Street. I would say probably like 7, 8.
Okay. So you're in Nashville now. You're a CFO, which is Chief Financial Officer, for those that don't know, of a tech company, correct?
Yes, I am. So the way that Wall Street works, and I don't know if you all know this, but basically, a lot of companies in the world are actually owned by another type of Wall Street hedge fund. They're called private equity funds, and some of these are publicly traded. Like you might have heard of like KKR or Blackstone. Right, like I work for a company that's actually owned by a fund as well. So it's kind of like the world is, you can argue that the world is just corporate world, and Wall Street is just a part of that corporate world.
Totally. So I want to get into how you went from, Wall Street to, I guess, still Wall Street, but you're, doing the CFO thing too. How did you end up on TikTok and then wanting to start your own business? Because that is where we're at today. While you're doing everything else, you got your whole business going. social media, and that's a lot of work. And a lot of people don't know how much work that really is until they're, knee deep in it. So get us started on that journey.
Yeah, for sure. So so I would say right before the pandemic started, it was like right when I guess February turned to March, and all this was starting. I basically just randomly, like on a whim, I had been on TikTok for a while just as a user, and I had randomly just took a video of myself like in the TikTok style. It was pretty bad, and I said, "This is why I'm going to start buying the S&P 500 at about 24 to 2,500 on the S&P 500." And it was based on some back of the envelope, like price to earnings kind of estimations. And, that's not like, it's just back of the envelope types of analysis. And I ended up it got like 2.5 million views. I actually ended up calling the exact bottom on the S&P 500. But yeah, so that's that. And people very clearly needed more information from me. So I just kept making content, right? Making content on TikTok, and then people just wanted more and more. So I started a website, acouplecents.com. I have a free daily email newsletter you guys can all sign up for. It's completely free. I wake up most mornings. I'm actually taking the next 2 days off, but almost every single day, or actually every single weekday, we send out a newsletter with business news and my take. So if there's news about Disney, I'll tell you about Disney stock. If there's news about Netflix, I'll tell you about my views on Netflix stock, that kind of stuff. And two, and I have a membership as well on my website where you get to see all my favorite stocks and my latest trades. I will say, right, Mr. 4-to-8's community is going to be much better for those who want to more actively trade and more actively invest. My style is a little bit more long-term. Ideally, I'm probably not selling a stock that I buy at least for 3 months. But if it rips to my target price earlier, I'm happy to sell it. But yeah, I think it actually fits together quite nicely because a lot of even the traders, although it's kind of it's a breed that is filtering out of Wall Street because of the computers. But a lot of the the traders and the shorter term guys on Wall Street still wanted fundamental research. So that's what I am, I'm a fundamental equity research analyst at heart. So yeah, I just make content now, and you're right. It's I have a full-time role as a CFO. I do all this content, and I feel an obligation to people because, the folks on my community are investing, tens, hundreds of thousands of dollars, maybe even more, some even more actually, I know, of their retirement accounts, right? I have one member who made $3 million on Bitcoin very early, and then he's looking to flip that to a more conservative equity portfolio. So, I feel a lot of what keeps me going, and as you know, first of all, 4-to-8, Mr. 4-to-8, he's the king of finance, social media, and everything. I have to follow suit, right? I may have been one of the first on the scene, but I'm 30 years old, man. I'm not really I am not native in the way that you are. So congrats to you, the community. I'm in the community.
Thank you.
In your community. It's an amazing community, guys. His community is amazing. But I think actually our communities are very complementary, right? His is going to be so much more engaging, a lot more fun, a lot of great ideas, right? Great ideas. You'll always lots of great advice from a lot of different people, or opinions, not advice. I think my site's a little bit more how you would structure, let's say you were 30 years old, worked a full-time job, and we're investing your 401k or personal portfolio. You would probably come to some of my strategies, but they actually do complement each other because usually,
absolutely,
right? For Mr. 4-to-8, you have to, this is a question to you. And if you like stocks, you do both investing and trading. They're both fun.
Absolutely. And so I think that the first thing that caught my attention when you started A Couple Cents was you have a pie graph that shows your portfolio. And in it, I didn't just see penny stocks and swing trades and OTC and all this stuff that's fun, for the retail investor, retail trader. I saw real estate, I saw crypto, I saw long term, I saw growth. So I started to take a step back, and this is something important, guys, because look, I'm a salesman, right? So you see my TikToks, I want you to get hyped up. The goal is this is a business, right? It's not just stocks, but for me, this is my, livelihood. This is my business. So I force the clicks. I click funnel you to the website. I get you into the server. And then from there, we provide an amazing community, right? It's very positive. We're focused on, high success trades, but they are risky, right? And so where a lot of people get lost is because we're on TikTok, we're pulling in people that are, 16 to 22, 23. And, it's expected that, they have, I have $1,000. What do I put all of my money in right now to get rich tomorrow? And that is, okay, that is like step one where everybody goes wrong, and you'll lose that money and you'll learn. It's just how the game works.
It's tuition.
And
that's tuition.
Yeah, it is tuition. It's market tuition. You don't go to college for free unless you're, okay, that's a bad, there's people that go to college for free. But the point is, everybody learns the hard way. I learned the hard way. I blew up multiple accounts, lost thousands and thousands of dollars. You have a really good day. You think, oh, I got this right. Here's the game though. And here's why, Justin and I bring a lot of value to each other. The game is long-term, right? So I've been able to harness my, and practice and craft my trading skills to where I'm able to make it a long-term game. But that doesn't mean that I don't have a retirement set up, that I don't have, a Roth IRA set up. That doesn't mean that I'm not in cryptos, that I'm not in real estate, because what happens when we're trading, right? And we're in 1,000 swing trades, all in full portfolio, and COVID-19 version 2 happens. Or what another topic that we're going to talk about later this evening is what happens when this bubble pops. When this massive tech bubble that we're in, what happens when it pops one day and you have no risk management, you have $25,000 all in, NEO and, some stock that you think is going to go to the moon next year, and it all, it shits the bed. And you're standing there with your hands in your pants like, what do I do? And that is why we really want to start focusing and integrating more of Justin's style as well, mixed with our style of trading. That way you guys can become well-rounded investors, because at the end of the day, both Justin and I'm going to speak on Justin's behalf, and he can attest to this. Our goal is not that you just follow plays and follow stock advice, or excuse me, not stock advice, but stock of the community blindly. But that you learn and can take these skills and go off the rest of your life and be able to make educated decisions in investing. A lot of decisions that people aren't well equipped to make in the real world. And unfortunately, they miss out on a lot of money.
Yeah, no, I have to say that's really well said. I think you need to bifurcate or separate the two parts of your brain, right? There's this is the side that I'm using for high risk, high reward trades. And then this is the side that I do not touch because this is my retirement. This is my wealth building, right? And they don't overlap, right? They shouldn't overlap. And I think it's dangerous when you try to overlap them. But I think it's interesting that you said, that you learned from the tuition too, because back in 07, 08, I was in high school and I was trading on Thinkorswim. Like, you all think this is all new? No, I've seen the cycles, right? I've seen multiple Bitcoin cycles. I've seen, this is my second, well, technically I was alive during the tech bubble, but I was too young to remember it. But this is my second really big financial crisis cycle that I've been, actually actively in the markets for. I was reading physical books back in 07. Like, I read, we didn't have like Discord. We didn't have Twitch. At some time in between, it used to be called Justin.tv, I think. Then they rebranded.
That was you, right?
Yeah, that was me. I'm just a billionaire. I'm a billionaire who started Twitch. Right. I wish. But yeah, and I was reading like options for dummies, right? But when you're like 35 years old, some of you will have a family, and you have a full-time job. You're not going to be trading out of the money options, right? And right, so you got to learn both. But I will say, damn, you're not going to have. You'll have a much more. You'll have a better winning strategy for your betting side of your brain doing this stuff than doing even like some of the more fun side of Wiseguy stuff than like betting on sports. I'll tell you that, right?
Totally.
So you might as well do both in the stock market and also learn a thing or two, right? When you bet on the 15th, I mean, I love football and I love a lot of sports, but when you bet on like the 15th season of football and you see, the same plays over and over again versus when you bet on this stuff, you learn who's going to win the electric vehicle race, who's going to disrupt genome editing, right? Like that kind of cool stuff. So ideally everyone here is a learner and you always have to learn. I mean, even some of the greatest billionaire investors, they're always learning.
Yeah, absolutely. So let's talk about the stock market. I want to dive deeper into something that you touched on, which is you've seen some cycles, right? And so we're in a cycle right now, but you've seen the stock market when it's stagnant, when it's trading sideways, when nothing sexy is going on, and now where we're at. So maybe from your brain, let's talk about the stock market this year. What did we see this year?
Yeah, so I'll try to, like, some people are new here, so I'm going to try to not use technical terms as much as I can. Pardon me if I do, though. I mean, you saw a shock to the system, obviously. Let me rewind. So basically in 2008, you saw, you guys watch go watch The Big Short. That's going to explain it in much more fun terms than I can. Basically, a bunch of credit, banks, blew up our system. The government printed a bunch of money and bailed out the banks and lowered interest rates to save the economy. So when you lower interest rates, it promotes a bunch of spending. And an interest rate is basically like if you save your money in the bank, how much cash is the bank paying you per year for keeping your money in the bank, like that kind of thing. And so when interest rates are low, that increases the price of growth stocks for a lot of different mathematical reasons. And so you saw, and plus we're in this age of yes, the internet existed from 95 to 2010 or 95 to 2007, but from 2007 to today was really that internet 2.0 rush, right? Is the birth of Uber, is the birth of Airbnb, is the birth of all DoorDash, all these companies that now that are famous in IPOing. Those are companies that I was tracking as private venture capital Silicon Valley companies. So, so anyway, that's the time. It's an innovative period. It was low interest rates. So we've seen the longest bull run ever. Since 2008, the recovery in 2008 to February 2000 or January, February 2020, we had the longest bull run ever. And it was boring as hell. There was no day trading for like 5 to 8 years because the day trading, you need a lot of volatility, right? You can't make a lot of money if the stock doesn't move a bunch, right? And so what happened was, coronavirus came, COVID, shocked the system. The economy shut down. The stock market tanked. I did my TikTok calling the bottom. TikTok is on the scene now, taking market share, but also the Fed comes in, bails out corporates, the U.S. Treasury and I guess the treasuries of most big countries comes out and gives stimulus bills. So they give everyone $1,200, and then now if you take out state unemployment, you're making an extra $700. So that's like 3 or 4 times what you used to make. So a lot of people are not working, or not the majority of people. I think it's a tale of two cities, right? If you're a white collar worker right now, or like a upper middle class person, like kind of white collar job or up, you're usually unaffected. You're like just staying at home, working remotely through Zoom, and buying a Peloton, right? Listing Spotify, buying Disney Plus. But if you're on TikTok all the time, but if you're on the other side, you've lost your job, but you don't feel it yet because the government's been feeding you actually a lot, in a lot of cases, more money than you used to make working at a restaurant or a fast food restaurant or something, right? So that means that a lot of consumers are still spending and saving. Actually, household savings are bigger than they ever been, or not ever, but bigger than I've seen on the chart, right, in recent memory, because the government's just giving you money. Now, where's the catch, right? The catch is that the government is just straight up printing the money. They're literally printing the money. And I think people are saying pause or something.
There was a little glitch for like 2 seconds.
Okay.
I think it should be.
So anyway, they start printing the money. And they basically say, oh, we just printed another $1 trillion and we're going to feed it to a bunch of people. And so people are worried that's going to cause runaway inflation, right? Because the more money you print, the more expensive everything else gets per dollar because you just now have more dollars. So in reality, what's happened is interest rates have gone down again to 0, like the lowest ever. Growth stocks have now pumped because of that. People are at home bored as hell with a bunch of government stimulus money. So they're spending a bunch of money on like e-commerce, Shopify shit. Like, I don't know if you curse on this. I'm sorry.
Pelotons,
but Pelotons are backed up. That's a good. Yeah. That's one of the top picks. If you guys join a couple cents, ROIC, only in addition to Mr. 4-8s, then you'll see Peloton is on the list. And I picked Peloton at $55 a share. I don't know what it's now, like 110, 120. Yeah. Anyway, don't get me on the Peloton train. But anyway, so right, like people are buying sneakers still, even though we're in a recession, because the government has now printed a bunch of money and given it to people. And so that means that corporate profits are up. A lot of tech corporate profits are up because people can still order online. The only ones that have really suffered are like theme parks, movie theaters, cruise lines, airlines, right? And even them, they're getting like traded up a bunch because everyone's at home using their stimulus bucks on Robinhood. So not that that's necessarily a bad thing. I think it's something I'm scared about. I've seen a lot of questions in the chat about, is a crash inevitable? Well, yeah, I mean, it's inevitable.
Always.
Inevitable on the time scale of like 10 to 20 years for sure. I think we're going to see a strong January because of funds flows. A lot of the institutional guys are behind the scene, or they're, I guess, getting a little FOMO on the market because they've been on the sidelines. So I think they're going to reallocate to the equity markets or stock market starting in January. But I'm also afraid of either a pullback or a pausation of growth of like hyper growth stocks. So that's like your Fastly's, or I don't know, like now it's Airbnb, because if interest rates go up, then value stocks are going to go up. So I mean, there's a lot there. So I don't know what you want to talk about.
Yeah, I guess, I mean, everybody's always, I think that the thing that I see a lot of is you can find whatever you're looking for. And that's one of the issues with FinTwit and, Discords and basically what social media has created is something where if I'm looking for somebody saying that the market's going to crash, they will give me a bear case, like the Sven guy. I don't know if you've ever seen the Sven guy.
Sven's interesting. He's such a bear.
He's a perma bear, right? Or then you can find the perma bulls that are saying growth stocks, Roku's going to hit 12,000 next week. All these, you can find whatever you're looking for. So one of the things that I really like about you is you give, your tech, you have an innovative mind, right? Like you loved Tesla until you couldn't handle it anymore, which we'll get into.
I'm back into it. Yeah.
Okay, good. You should be. So I mean, you're into tech, but then there's that part of you that, like you said, you're in your 30s. You have this like very, very deep knowledge on the back end as far as like the numbers go, and running the numbers and seeing these valuations be like, so high that you can't even, get your brain to digest, putting $10 into this company. So I guess what I'm getting to is, how comfortable are you with, the market in 2021, and how are you going to go about, asset allocation?
Yeah, I am cautiously optimistic. Cautiously optimistic. I am careful. I think we're going to see a bullish year. Goldman Sachs thinks we're going to see a bullish year. Morgan Stanley thinks we're going to see a bearish year or a pullback. I think you guys have all seen insane gains, right? Like a lot of times you're levering up with derivatives like options. For us, we're more just buying and holding on longer term. But I mean, since August, we've seen on the ROIC big board, which is kind of like my list of what I'm buying and selling and what I own, 34 as of like today, 34% gains since August 18th. And all while being on average like 15% cash. So that means that most of our stuff has outperformed by like, I don't know, 40% plus, right? In like 2 quarters, less than 2 quarters. I am, right, it's not a brag thing. Like I'm in it for decades, right? Like even if you make a great 50% year or 100% year, like I'm not touching that money. Like I'm not touching,
Right.
like to your point, right? I'm not touching that money till I'm like, I don't know, minimum 55. That's like 20,
Right.
whatever, how many years from now, 25 years from now. And so all that to say is like, I own a lot of real estate, like me and my friends. And I think this is what you were getting to before, but Mr. 48 knows this. And, me and a group of my friends own a bunch of homes here in Nashville. We saw the writing on the wall about people moving away from big cities to low tax states, up and coming cities. So we bought a bunch of property. So when the market was really frothy from 2017 to 2019, we actually made a ton of return on a lot of our capital by buying and owning rental properties here. I am very bullish on Bitcoin, very bullish on Bitcoin. So, I mean, that's been a top performer for us on the ROIC big board. So I think to wrap it up, I think it's diversification. You know me, Mr. 48. I don't really care what it is. I was out of the stock market for like 2 or 3 years.
Right.
And I grew up, like I'm someone who was an addict since, I don't know, like
Since
6th
birth.
grade, honestly. I called the Google IPO like in the 5th or 6th grade or something like that. And I wanted to buy it, and nobody knew what Google was, right? It was like you type in this thing, whatever, right?
Right.
So, but I was out of the market, but I'm always sniffing around for the best ROI, right? Which is why I look for, like, I called my group ROIC, return on invested capital, because I don't really care. Like you can't be emotional about like, oh, I'm like this like EV stock guy, like, and I only consume, eat, drink, and breathe EV stocks, right? Like I don't care if it looks like a house. I don't care if it looks like an apartment building. I don't care if it looks like an EV stock. I don't care if it looks like a boring like public storage stock. And I don't even care if it looks like a crypto, right? I only find what the best risk reward return on capital is. And I know you all do that. Ace of Trades, I'm sure. I haven't met you yet, but I've heard good things. Mr. 48, right? You all look for the best ROI. The question is, what's your time frame, right? My time frame is 5 to 10 years minimum. So that's just who I am.
Right. Yeah, and and we got some people whose time frames are like, hey, the stock hasn't gone up in 3 minutes. Should I sell it? So it's all relative. It's all relative time frame wise, like you're saying. I think that what I want to get into a little bit is 2 things here. You mentioned taking the emotion out of investing, and not just investing in stocks or a real estate, but in anything. The importance of taking the emotion out and not saying, oh, well, I've saved up $200,000, I guess it's time to buy a house, when that would be an emotional play. Because if you look at how, just me and you talking the other day, you posted something about the housing market. This wouldn't be the best time to go buy a house, would it?
No, yeah, no, you saw my post. I have to you and I produce so much content that like I don't even like remember what I post. I do this analysis. I post it. I'm a couple cents everywhere. A couple cents. But yeah, so just to read you the story, home ownership and existing home sales. So the number of people that own homes and the number of homes that are being sold and bought and sold are not levels. They're at such elevated levels that we haven't seen these levels since the housing bubble. 2, mortgage interest rates are at historic lows. Housing inventory is also at historic lows because sellers don't want to sell because of COVID. So there are no houses on the market for sale. There are a ton of people that want to buy homes because everyone's stuck at home and moving away from inner cities where there are apartments. And yeah, I know I'm in an apartment, but I have a house. I shoot here and work out of this apartment. But so that's that. So no supply, tons of demand, low interest rates. So people are willing to pay more for a house because their payment's smaller. And housing builds are still slow. And so that's been inflating the price of real estate. So I'm out of the real estate game right now.
Interesting. So interesting to hear. And like you said, you took the emotions out of investing and trading. And you're somebody who is married to the game, I guess we could say. And you
staked my career on it, yeah.
Yeah, 2 to 3 years away is something that not a lot of people could do. So yeah, it's super interesting. So I wanted to get into something that's we call it this is gonna be the new hot question series, right? So anybody that we get on here that is married to the stock market game, we want to ask them some stock related questions. So if I were to tell you, you get to take 5 stocks over the next 40 to 50 years to your grave. You're in your 30s. So, by the time you can cash out a 401k or Roth, 60. So you have 30 years. You're taking 5 stocks with you. What are they?
30 years. Today, I think I'm taking Amazon. I'm taking probably Facebook at this valuation. The guy's a killer. And I know a lot of people don't like Zuckerberg on a personal level, but he's a killer, right? That's an interesting one. On a 30-year basis, probably pick Bitcoin. So that's a cheating one.
Yeah, that's fine.
That's cheating. But if you need a ticker, if you need to buy a ticker, GBTC is the way to play it. Even though there's a premium, we can talk about that, whatever. So that's 3. Let's see.
I'm surprised Tesla hasn't gone in there yet. You're not long-term on Tesla, huh?
I am long-term on Tesla, but the valuation right now is just kind of insane.
Right.
Let's see. It's probably Spotify. I think they're going to create the YouTube for podcasting. And I think audio is worth, I don't know, even if it's worth a third or a half of video, it's going to be really good. Yeah, and then maybe choose like a Alibaba or Tencent. I don't know.
Totally. That's cool. Yeah. Sorry to put you on the spot with that tough question, but it's good to think about, sometimes putting these stocks under the pillow and not checking on them for a couple of years.
Yeah. Oh, wait, let me address. So someone just said GBTC, LOL. Hey, just to clarify, I buy at spot on exchanges and I store my own crypto. But for most people who are investing in their IRA or their accounts or whatever, look, this thing is Bitcoin's, the theory on Bitcoin is if I'm right, you're over 3 decades, this thing's going to turn into 100, 200, 300, 400, 500,000 per Bitcoin. Over 3 decades plus, right? So what's a 20% premium in the face of, right? It's 20,000, right? However many times, 25 times.
Cost.
Yeah, right. So, and especially if you're doing it like a Roth IRA, you do GBTC because that's the way you do it, and you don't have to pay taxes on it at all, right? So if you're right on Bitcoin, and I own a bunch of GBTC in my Roth vehicle. A rollover Roth vehicle. And yeah, if it 25x's from here, I just made so much money and I don't need to pay Mr. Taxman anything. So is that worth a 20% premium? Like, I think so. Anyway.
Yeah, totally. Hey, and this is fun. This is something new for us. We're obviously, you see what we're doing. We're trading, small caps, large caps, options. We're trying to expand a little bit, and we've opened up, a section for cryptocurrency. It's tough to get into, right? So it's tough to just say,
really
hey,
complicated.
Let's get into this, right? So, for those of you guys that don't know anything about it, you might get a little bit lost in this next conversation, but we're going to dive a little bit deeper for, the 40-50% that know what's going on. So you're bullish on Bitcoin, and are you bullish on cryptocurrency in general, like Ethereum, Litecoin, and some of the altcoins, or is it just Bitcoin that you're after?
So let me break investing down very simply. And it doesn't it's not only because of Bitcoin, or it's not only in crypto. It really applies to everything. Think about a roulette table. What's the bet what bet on that table is the most likely to get called or to win, to pay something out, right? It's red or black, right? You either need to be right about red or black. If you bet on black 47, not only do you have to be right, it pays out way more for sure, but it's way less likely to pay out than just betting red or black, right? Because you have to not only do you have to be right about the color, but you have to be right about the number. And they're like, how many numbers? I don't even know, right? So similarly, if you bet on some altcoin, not only do you have to be right about crypto, you have to be right about Bitcoin versus everything else. And then not only you have to be right about that, you have to be right about that tech versus the other competing tech. So a lot of my retirement account is exposed to allocated towards Bitcoin, because all I have to do is be right about Bitcoin. So a little history for those of you that are new to Bitcoin. Bitcoin is the first internet-born and internet-lived store of value or asset that is not controlled by a company and not controlled by a government and not controlled by anybody. And it invented the blockchain technology. The US dollar and most Western types of currencies and even more were born out of gold. So gold was just the first on the scene. The gold was it was the first, right? Like precious metal. It's scarce. You can shave it up into little bits and pay people for a little bit, right? Like if your cow is worth this, I can shave up just a certain amount of gold and give it to you. It's scarce, so you can't find a lot. Like even though you try, you only find like 2% a year. And it was first, right? Silver does the same stuff, but gold was first. Gold is king. So in the crypto world, right? On the internet world, I think of the world as we have multiple layers of the world. The first layer is the physical world. Gold is the king asset or the store of value there. And then on top of gold, the US dollar and I guess like paper currency was made, right? Because the US dollar used to say, you could exchange this dollar for this much gold. It's backed by gold, right? It's just a currency to denote gold. Similarly, on the internet layer of the world, now you have the internet's relatively new. It's like 20 years old, right? Gold has had the ability to be used as a medium exchange for thousands and thousands of years. The internet's really only 20 years old. Then now you have this gold that's found and invented on the internet. Now, Bitcoin invented it and it's first, right? It's first. So I think it's going to win. Do you think that internet gold and internet currency is crypto? Like, do you think crypto is going to succeed? If so, Bitcoin will succeed. So all you got to do is be right about, is there going to be an internet currency? And people are like, oh, I don't like Bitcoin because the governments are going to ban internet currency, third-party, unregulated internet currency. But if you believe that there should be one, then Bitcoin will be that. Now, Litecoin is just the silver to the gold. So I'm not all about that silver game, man. I'm all about the gold, right? I don't brag about silver Rolexes, like brag about gold Rolexes, right? I mean, I don't.
Right.
I'm an Apple Watch guy, but it's a little hyperbole here, right? So, I mean, I like Ethereum. I own a bunch of Ethereum.
There's a lot of bull cases for Ethereum, and I don't even, I got to be honest with you, I get lost in the sauce with all these cryptos, but there's a lot of people saying that, at the valuation that Ethereum is at, it can catch up to Bitcoin as Bitcoin. I mean, this is, in the future, Bitcoin will keep rising too, but to basically catch onto the train again, you have your second chance here with Ethereum. What are your thoughts?
So I think Bitcoin has the chance of hitting, I don't know, we'll see. I don't like calling prices. You guys, I'm a fundamental analyst.
Yeah.
But on a 50-year time frame, I think Bitcoin has a good chance of being worth $250,000 to $500,000 of Bitcoin. In the short term, I'm very bullish still. Like, we're testing 20,000 and the sellers are getting eaten up. I'm not a technical guy, but you buy it, and I think we have a shot of getting to 50,000.
Yeah.
Before I turn 33, right? 32. And
50 before 50.
50, no. Hopefully 500,000 before 50.
Yeah.
But the way that I saw the 2007 mania and bull markets go is the funds go to pump Bitcoin, and Bitcoin stalls, and then all that money flows into the smaller coins. And so Ethereum pumps even more, XRP pumps even more, and all these other things pump even more, right? So I think that's a good trade, and I like Ethereum because Ethereum is not it's not a cryptocurrency per se. The way you should think about it is it's a Internet 3.0. So Internet 2.0 is hosted on servers in like big server farms. Internet 3.0 is distributed servers. So everyone's their own, like, it's kind of like a Napster or like,
Yeah.
It's basically distributed smart contracts. It's hard to explain, guys. It's really hard to explain.
Yeah.
But the problem with that is Ethereum is the daddy there, the king. But there are a lot of other competing technologies that are like a Cardano, and there's all these other competing technologies. And Internet 3.0 is less obvious to me than Internet Gold. So it's kind of one of those things, right? Like the further down you go down the kind of altcoin map, the closer you are to penny stock. And Bitcoin to me is like buying, I don't know, Tesla at a good price.
Right. That's awesome, man. Yeah, and it's great that we got into that, because I think that, circling back to the beginning of this conversation, one of the things that I really appreciate about you is your transparency with, what it means to be an investor. And what it means to be an investor is not just trading stocks every day or owning a couple shares of Amazon and Apple and, calling it a day. What an investor means is, like you said, ROI, looking for that return wherever the opportunity is, presents itself. So if it is gold and we see oil, shooting up in the next couple of years, then that's where we'll be. If it's housing and real estate investing and, starting businesses like right now, I think that one of the best returns on investment, especially for some of you younger guys, is on YouTube. Believe it or not, there's so much valuable information out there for free that you could be using to create businesses, start e-commerce, whatever it may be. And that's for free. And you could start something that you guys can be making $2,000 to $3,000. And this is my goal. I want everybody to be making at least $2,000 to $3,000 a month on top of whatever you guys are doing with your regular job, your 9 to 5. That way, when it comes time to, if you really have that entrepreneurship spirit, to buckle down, start your side hustle, your business, and, take control of your future. And so, and that's one thing I wanted to talk to you about as well. And then we can get into some questions from the crowd. With ROIC, with acouplecents.com, I'm a real member, so I get it confused. You've really turned things around. Like they were great, and now it's like I'm on there and it looks beautiful. Like it looks amazing. You guys should all go check that out right now. acouplecents.com.
Yeah, I can show it if you guys want. I mean, first of
Yes.
all, I want to thank. Can we all thank Mr. 48? His community is awesome. It's only growing. It's growing for a reason, and he puts education first. So definitely, before anything, definitely go. If you're not already, it sounds like some of you are just thinking about it. Go join Wiseguy Investing. He's up to Mr. 48's probably one of the most entrepreneurial guy I think I've ever met. So that's why, obviously, right? Like I'm full-time CFO. I don't talk to everyone all that often, and he's someone I've become closer and closer to. So definitely go sign up.
Thank you.
For Mr. 48 stuff. And I'll just show my screen for my stuff. I mean, thank you for giving me a little bit of time.
Yeah, for sure.
Hold on, using OBS here. Okay, so desktop. Okay, so this is my website. I basically write a free daily email newsletter every day, and it goes up on the website. So we post all business news, a lot of the key business news, and then I will usually like post my analyst read about stocks or whatever. Like for a good example is like Roblox's IPO. If you go to that article, I'll tell you the news and then also what I think about Roblox's IPO and if I think you should buy it, or C3.ai or whatever, right? Like whatever's in the news. So if you, that's all free, right? So that's all, and you can sign up to get that in your inbox every day. Hold on, my site's I think it's slow because of the stream. So that's all free. You just sign up, acouplecents.com/sign up, or acouplecents.com. And that's that, right? But then you can join, it's for $9.99 a month, but there's a 7-day free trial for those of you that are on the fence. For ROIC, which is kind of our premium group, it just helps support the content. And that's what you guys are all doing really here too, is supporting the content, supporting Mr. 48's content. So go sign up for his. But that, you get my premium weekly investing guide, our favorite stock picks and trades. You can look up the famous investors and what they're holding. So here I have like Kathy Wood at ARK Invest. I mean, you can look some of this up publicly, but okay, well I have a 500 error. I gotta go fix that when I'm done. Or I think it's probably because I'm streaming and it's slow. So I'll go check that out. But anyway, you can definitely go check out like famous investor stuff plus what we hold. There's community valuation, so you can check out like Facebook's valuation and tear sheet. Let's see if this works. If not, I'm gonna have to hop right off and fix my website. Here it is. Okay, so I think there's just a 500 error over there. So anyway, like I have a little tear sheet for these key ones, and I'm hoping to add more companies, and you can kind of see like their revenue, gross profit, EBITDA, and some of their like valuation metrics to kind of follow along the analysis. So yeah, so go sign up if you're interested. But I think to Mr. 48's point is, and I agree with him, it's the thing you can invest in the most is yourself, right? You have to go find, like, the world is not going to give you a bunch of like home runs just because you exist. There will be opportunities. Some of you will be luckier than others, right? You have to go find the ROI in your life, whether or not that's for some reason you get a really good job and a really great career, or some of you guys are going to be really good at investing in stocks, and even some of you might make a career like I did out of it, and some of you might be really great real estate investors someday, or some of you might just learn a trade or whatever. You get what I'm saying? So the thing you can invest the most in is yourself. As you can tell, like I read a lot. I study a lot. I think I'm
we lost you there a little bit,
okay.
Jackson.
Yeah, hold on. It's because I'm zooming as well. Hold on. Stop video. Yeah, let me pause.
No worries.
I'm running too much on this PC. All right, good. I'm back. Okay, but basically invest in yourself, education, the more you know. I will say, like, the world gives everyone opportunities, but most people don't see it because they don't know an opportunity when it presents itself. And the reason you don't see it when it presents itself is because you don't know that it's an opportunity. And so if you don't invest in yourself early and you don't understand an opportunity versus not an opportunity, then, and a good opportunity from a really crappy one, then that's the difference between making it and not. So I started the website, and Mr. 48 is super entrepreneurial, starting this awesome community. Like, that stuff is, maybe for me even, maybe I'll do this full time if we can grow my community big enough. We're not there yet. Again, I'm not. I got a thing or two to learn from Mr. 48. But really, like, you gotta invest in yourself, because here's a good example. If I see this a lot, a friend will come to another friend and say, "Hey, man, let's open up a bar restaurant." And then, it's your friend. You trust the friend, and the friend is like, it's going to be a barbecue joint. And if you're not educated at that moment in time, I see so many people investing 50, 100 grand in these endeavors and losing their money because they don't know what's a good investment. And that's not only in stocks, that's not only in real estate, that's everything. Everything is a business. You just need to see it. It's like the Matrix. Seriously, it's like, you guys see the Matrix? I'm sure you have, right? If you are uneducated in investing and business, the world looks like the simulation to you. Like, you don't know, right? If something comes across your plate, you're like, I don't know, like, barbecue sounds pretty yummy. I should invest. People will like barbecue. But if you see through it and you truly understand business and investing, you see, like, the digits at the end of the first Matrix movie, right? Like everything's a business. A small startup barbecue joint still has revenues minus costs and profits. If you start my website, we have membership revenue that supports the content minus the cost it takes for me. I have someone who helps, like, all the costs to run the website, right? Everything is a business, everything. And if you buy a rental real estate, I think these real estate gurus, they like try to brand themselves as completely different. But no, you have rental revenue minus mortgage costs minus maintenance costs equals profits. And what are your profits divided by how much money it took you to get that investment? ROI. ROI to everything. Everything's ROI.
Everything. Yeah, that's an amazing point. I think that might have been the highlight of the stream. Because what we're really trying to grow here, guys, and I thank you guys for all sticking around. We'll take some questions here in a few minutes. This isn't just a stock investing community, stock trading community. This is a community of like-minded entrepreneurs that are hustling and are going to motivate each other to get the bag and get it by any means possible. And what Justin is really saying is, it rings true. Like myself, I grew up, I can't even think of a business that I haven't started, run, tried, got my feet wet in. I was doing pyramid schemes when I was like 13 or 14, hustling, having kids in my garage, trying to, pitch them on the idea that they could get a free BMW, right? It was in my blood. It was in me to do this. I've always had this, but I know a lot of people that don't have it. And, here's a start for you guys that don't. Go around your day-to-day, just walk around and find issues and find problems that you run into. It doesn't matter how big they are, it doesn't matter how small they are. You could be driving and see somebody get in a car accident because they're texting and driving and think, I wish I could fix this texting and driving problem. Or you could go to open a door, COVID's happening and you're like, I don't really want to open this door with my hands. Ask yourself two questions. Is there a solution, and can I make the solution better? And if the answer is yes, then congratulations, you're an entrepreneur. Get your ass to work, sit down, write it on a piece of paper and start working on it, because that's how this world works. The world of business is, we live in a free market where if Justin makes guitars and sells them for $500 and they're a piece of shit, and I make guitars and they're amazing and I sell them for $200. Guess who's walking away with the bag, and guess who's driving away in the Lamborghini? I am. So you guys have all the potential in the world. And so with these series, we're going to keep grinding and, really motivating you guys to take advantage of, all these amazing, business opportunities out there. The internet is business. It is, even though it seems like it may be tapped, it is completely untapped. There is so many opportunities coming up, absolutely amazing opportunities. So let's get into questions real quick. And while we're, let's get into the first question. If you guys have any for Justin, we don't want to hold him too long. So I did see one question. Somebody said, "Hey, Justin, I'm really interested in getting into becoming a fund manager. How can I contact you?"
Yeah, I'm most active on my website. So if you sign up for acouplecents.com in the Roic membership, if you post in the activity feed and at me, it's usually the best way. As you can tell, the internet is exhausting, especially because I have a full-time job as a CFO. So that's probably the best way. You can all of you can add me on LinkedIn. I accept everyone, but DMs are just impossible these days.
Cool. We've had a couple people asking, what stock should we look at now? Let's just talk about maybe what are some of your top stock picks for 2021.
I am a very concentrated investor, so I'm going to keep most of them on the big board kind of private for now, but definitely check the full one out. But I'll give you a couple. So we already talked about Bitcoin. I'm super bullish on Bitcoin for next year. But if I'm wrong, the cool thing about Bitcoin is if I'm wrong and you buy it at 19,000 and it goes down to 5,000, who cares? I've held Bitcoin from 20,000 down to 3,500, and then I just bought more. That's the cool thing about Bitcoin, is because I'm telling you, my thesis is that in a decade or 2 decades, this thing's going to be worth over 100 grand, right? So that's that. Giving away the whole, my favorite stock is not that much of a secret. It's on my YouTube channel. Amazon is something that you buy and hold you can just keep buying it. Amazon and Jeff Bezos are going to eat the world. Unlike Apple, who comes out with shitty headphones, pardon my French,
for $6,000.
Yeah, so dumb.
Buy Apple stock, not Apple headphones for your girlfriend. Get her into
But
stocks.
I don't even like Apple stock. I'm gonna tell you why. It's because Apple makes their profits and doesn't know what to do with their cash, because all they can do, they are not innovative anymore. I bought Apple back when I first got my hands in high school on the first iPhone. And I was the guy who had a Pocket PC and by Compaq. You guys don't even know that company anymore. And Palm Pilot. And I was like, this is so much better. This is going to change the world. So I invested in Apple. Apple was my first love, or second love after Google. But Amazon, they don't make a profit because they spend all that money buying other companies and reinvesting that capital. Now, if you ask me, do I want a dividend stock that pays me a dividend and then I'm just going to use that dividend to buy more dividend stock? Or do I want Amazon, who has all these opportunities and is just going to invest that for me? I want Jeff Bezos to work for me. I don't want to work for myself in that scenario, right? If Apple sends me a dividend check, what do I do with that? I don't have anything else I need. I can buy it with. But Jeff Bezos, he doesn't give me a dividend check. He says, instead of giving me a dividend check, he says, hey buddy, I have all these opportunities I can invest in and you don't. Just chill out. Just own the stock. And then he goes and buys PillPack. So now he's going to ship pharmacy pills to your door. And then he goes and buys Ring, either Ring, right? I think they own Ring.
Yeah, Ring doorbell.
Yeah, Ring doorbells, because now Amazon's going to be in your house. They invest all that stuff because you don't have good investment opportunities. Jeff Bezos does. And so I don't care about Amazon or Apple or Verizon giving me a dividend. You're going to hear about all these dividend gurus all you do is you get this 5% dividend and then you buy more dividend stock. See, so you get 5% and then you buy another stock that also gives you 5%. So it's fake compounding. Whereas Jeff Bezos makes $1 billion and then goes and buys a factory that pays back 10x. Not 5%, 10x.
Right.
So that's something you buy for the long, long term, 30 years. That's the one thing. It's, to me, 30 years is Amazon and Bitcoin. And then, you know, I'll give you another one. I still like Peloton. I picked Peloton at 55. Peloton's trading at like 15 times forward gross profit. And it's misunderstood. They're like sold out. They can't even keep up with demand. You know, everyone I know in my kind of socioeconomic sphere loves it. You don't need to believe that everybody gets a Peloton. All you got to do is believe that a lot of rich people do. And I see all my young millennial well-off people, they all have Pelotons and they all like love it. It's like a cult.
Totally.
So those are the 3 stocks I'm going to give you. But if you want to know the rest and want to know my trades in real time, sign up for mine, acouplecents.com, the ROIC membership.
Absolutely. Absolutely. Hey, and then it's time for the first giveaway, guys. We'll just get it popping right now. Type in cents. The code word is cents, CENTS. That's going to be the code word. And then we'll announce it after this next question. One of the questions that I really did like here was somebody, Fat Potato said, I'm big on emerging markets. Are you as well? If so, which ones?
Call me Buffett, but I bet on America.
You believe.
Well, here's the thing. The U.S. right now, until we're dethroned, we are the gold to the world. We're the reserve currency. We are the predominant military projection force. We are the Bitcoin is to crypto, the U.S. is to the world. When there's a phrase from last financial crisis, not this one, so back in 2008, when America sneezes, the world catches a cold. And I believe that emerging markets, all signs point to emerging markets doing really well. I don't know it well enough. I don't know. I will never be able to understand emerging markets well enough to bet the farm on it. But I can bet the farm on Amazon. Honestly, I could sell everything in the world and everything that I own and just buy Amazon and just sleep well at night. Like I don't even need to open up my portfolio for 20 years, right? Because I know Amazon so innately. I don't know the like random internet bookseller of India. I don't know like the random like Facebook of Nigeria. Like I don't know these things, and I don't know what their governments are doing with their money printing policy, right? Yeah. So sure, I like EM, fine. But honestly, I think in this world, winners win and losers lose. And I'm not calling other countries losers. I'm saying it's the power law, right? It means it's like the 80-20 rule. Have you guys heard of that? Like I think 20% of the winners, 20% of the winners take the 80% of the profits. So I think like China might be one of them. So that's why I like Alibaba and Tencent.
Totally.
And so my exposure to international stocks are towards like Chinese dominant players, like the Amazons of China. And I have nothing against like European stocks or emerging market stocks, but I've been hearing the thing about India for a long, long time. And India has not outperformed over the last 2 decades. China has done a masterful job for themselves. Whatever. So I mean, I just, and even if there's some ripe opportunity and like what's an emerging market, like, I don't know, what else is an emerging market? Like Southeast Asia. I think everyone gets all hyped up about Sea Limited. I don't know. How do you really, people ask me about that all the time. How do you know that Sea Limited is really that good? Do you live there? A lot of people that are buying it don't live there. So
and that actually goes back to, and wait, I'm going to choose the winner real quick so we can chill with this.
Yeah, absolutely.
Winner is at C_Chappie35. That's the winner. C_Chappie35. Send me a DM on, open up a support ticket and we'll take care of you in the group. SE, right? And that falls into the same category with a lot of other tickers that, you could have made a great, don't get me wrong, you could have made a grip this year on SE.
For sure.
That's not to take away from the same point that I was making earlier, that you can make pretty much a bull case for anything, and especially with Twitter and pretty much all these social medias out there, where I can go out there and write some bull case for SE and say, hey, the Southeast Asia, all they do is play video games 24/7. The internet cafes are open. They play during their lunch break. And, this company combines gaming and e-commerce and, 5 separate companies that we have in the US, they combine it in one bundle. Shouldn't you, like, this is a must buy, right? And so that's kind of where I see a lot of people headed. And, I call it Turkey Day, right? So the turkey runs around for, a full 360 whatever days in the year, and then until it's Thanksgiving, right? And then his head gets chopped off. So that's kind of where I see a lot of, people ending up. So, hey, one last question for you. This, with your business, right? And this is just from like a business standpoint. You've been working hard on a couple cents. Is your goal to, turn this into something that is really, like, where do you see this going, and what is your business aspirations?
Yeah. So like I said, Mr. Forte, you are the king of internet entrepreneurship in my mind, in our space.
Thank you.
I have to me, I think the internet will speak. I think I can go full time on this stuff if I hit 4,000 members. Right now I have about 1,500. So, and again, I churn out a lot of content. I'm a little less strong on the kind of social media marketing types of stuff. It looks like I'm frozen again. Hold on. I think it's my connection. You can still hear me though, right?
Yeah. Yep. Yeah. Don't worry, guys. We know it's frozen. Just do a little refresh. Should get it going again. There we go. I think I see you.
Am I back?
At least the load screen's back. Yeah, we're back. Should the refresh. Should be good.
Do I hit the refresh?
Okay, yeah, you're back.
Okay, I'm back. Okay.
Yep.
Yeah. So, so the question is, could I do this full time? I think, yeah, like if I 2 to 3 times my website subscriptions, I think I can do this. But again, like I've got a great career. I've worked really hard for it, and it wouldn't be the worst thing in the world if I just continued along my CFO Wall Street track. But if the internet will speak, if folks out there want like top level equity research and guidance from me, like one of the only publicly facing hedge fund folks that I've ever seen out there, then they'll sign up and support the content at $10 a month. But if not, there might be a reason why, I don't know. Right. So, but the answer is yeah. Like I would love that. I love doing this. It's a lot of work. Double duty is like crazy. So if you guys want to support the content and even dive in even more, acouplecents.com.
I would love everybody to once again go check out acouplecents.com, ACOUPLECENTS. I'll also put it in the messages. Hey, and then I got a question for you guys. Everybody that's been sticking around with us. I think we've had over 1,200 people cycle through, 1,300 people cycle through tonight. So everybody that stuck around with us, would you guys like to see a collaboration between myself and our community and Justin's community, A Couple Cents? We're there could be some potential there for us to work together and have us offer you guys, the Wiseguy Investing offer you guys the short-term stuff and the swing trades and the scalps and everything like that, and then get the more in-depth knowledge and long distance and longevity trades and stuff from Justin's A Couple Cents. So it looks like the yeses are spamming in. So,
yeah, that's awesome. Here, I just want to show you. So my website is back. I just want to show you one thing. I don't know why it was roughing out right there, but anyway. So we update for like other like famous investor holdings, but that's cool. But yeah, like that's awesome. Thank you for saying yes. I will say this is The path starts with Wiseguy. His stuff is awesome. So I just appreciate you having me on.
Awesome. Totally. Hey, once again, guys, thank you. This is our, I think, third or fourth time doing this, our third or fourth guest, but Justin was the inspiration behind Wiseguy. Justin was the inspiration behind TikTok. I would not be where I'm at today, inadvertently without Justin. So, let's all say a huge thank you to Justin. Go follow him on TikTok. Go follow him on Twitter, on YouTube as well. His YouTube videos are amazing. Seriously, guys, A Couple Cents on YouTube and acouplecents.com. This guy is, as they say in here, Justin is OP. Yeah, he is overpowered. The guy's crushing it. So, thank you to all of you guys that have cycled through, stuck with us. You guys are enjoying this. We're gonna keep giving you guys more content, more guests, and the goal will be to check back in with Justin, and have him back on here, and then see where we're all at. Maybe we're at 100,000 members. His business is at 5,000, and he's just crushing it, right? So that's what we want to do. So thank you, Justin.
Yeah, thank you. I appreciate it. And hopefully I'm on soon. Thank you all.
Cool. Thank you, guys. Good night.